Hello traders, AAPL Fibonacci Trading Institute, June 19th, 12 minutes before FOMC, the most important financial event of the month. Will the rates be increased or raised or not? What is important to know before the most volatile news? What's important to know is what to expect in the markets based on price action and Fibonacci levels, as price and Fibonacci tells you in advance what to expect next. This is day trading chart from the trading room this morning. This is the end of the minor trend we've been monitoring for the last few days. This is crucial Fibonacci support, not the place to ever short near. For the last 28 hours, every single short fails. This is the end of the minor trend. This is proprietary Fibonacci level. This is brick wall. No matter what day trading chart you trade, no matter if it's 515, no matter if it's anything, this has been crucial support for the last 28 hours. If I convert this chart to 5, the most popular chart on S&P, what do you see? This key support is what we've been watching for the last few days. If market crashes as low as possible, it's a gift. It's ultimate trend inception. This is proprietary Fibonacci levels I developed in 2007 and had been teaching to traders from beginner to hedge fund managers since 2011. It is only Fibonacci. It is only price. Nothing else matters. Lower the price collapses, better off we are. If this key Fibonacci support respected, it means buyers fully in charge. Shorting near, not a brilliant thing to do. This is key day trading chart in front of you. This is key support. If this is key support respected, it confirms the weakness of the sellers. Knowledgeable trader who knows the rules knows this is a place we will monitor for long, as played out for the last 28 hours, where every single short failed. If at the time of FOMC, when knowledgeable trader the first few minutes ignores market structure because formations are extremely dangerous and volatile, if price collapses here to ultimate trend inception, to reversal zone, it's a gift. 2900 area, institutional support, ultimate bullish institutional trend inception. So, this is day trading chart 11 minutes prior to FOMC. Let's walk down memory lane so you can remember how powerful and accurate this Fibonacci method is. This is bearish correction 2018. This is Fibonacci reversal zone, stunning place to short from. Weekly chart identifies large institutional volume. This is November 2018. What do you see in front of you? 2500 key support, 2300 bright green line, ultimate bullish trend inception. This is what plays out next. Price is frozen at key support, 2600 number. The entire 2018. This is exact same support you're witnessing in front of you right now, not on institutional chart, but on day trading chart to the tick. Did we know or did we know? For days, not the place to short. It is that simple. This is institutional support. Knowledgeable trader understands institutions not getting in and out of position. 2600 brick wall entire 2018. This is what plays out next, finally, when this support is out. 2500 next. Slowly but surely. Shock or not. What is a trend inception? Reversal zone as what we're monitoring for next on S&P, except in today's market. This is where buyers stepped in from traders. This was the start of 2019. The only brick wall remained exact same level as key support to the downside, the end of the minor trend, ultimate resistance. When buyers breaking through the end of the minor trend, bullish rally flies through the roof. What is the problem in front of you? 2900 number. This is where market sold off from in 2018. All in advance, never after the fact. How many weeks of pullbacks did we have from 2800 number? 8 weeks of struggle. For all the reasons, because the most important rule in the method is an obstacle. 2800 market taking a massive pause as expected. Finally reaches Fibonacci resistance. Ultimate high is a problem. Trading 101, it is not little resistance. It is institutional resistance. And what did I say for over a year? 2900 will be crucial 2019 at the end of the minor trend. Response at this level will determine market for months and years to come. 2900 out, 3000 will follow. 3000 is out, 3300 will follow. All in advance, never after the fact. And that's the power of the method. And that's where we are now. This morning on S&P, at key institutional resistance in front of you. This is everything, traders. Levels are slightly different because contract on S&P changed from June to September. If you understand futures markets, you know that extremely well. With a change of the contract, numbers slightly change. So, this is weekly chart. This is institutional chart, all identified months and years in advance. This is exact same accuracy that plays out to day trading chart. Hourly chart is absolutely crucial, where market sold off from. This is the market yesterday morning. This is key resistance. This is key support. Again, what would we like to see on the market? For the price to collapse as low as possible. Exact same thing you saw on institutional weekly chart that you can also use for your long-term investments is what we would like to see next on S&P. S&P as low as possible, ultimate trend inception. If I would put this chart side by side, if I would convert this chart to 1 or 5, this is what played out from ultimate trend inception. And this is exact same bottom that we would like to see next on S&P. Ultimate low, stunning place to be. So, hourly chart, absolutely crucial to day trading position. This resistance right now is a problem, traders. This is what not letting price through. FOMC 3 minutes from now. We're extremely clear. We're dealing with very, very weak buyers. And that's a problem. So ladies and gentlemen, FOMC 2 minutes from now, we're monitoring very, very clearly and very, very carefully this key resistance. Everyone with me? Your day trading support, this level. If price will be struggling in this range, this is not a good news. We need for the price to collapse as low as possible. We need for the price to collapse away to ultimate trend inception. 2900 number will be ideal. First 5 minutes, please ignore anything and everything that price does. It is absolutely essential to recognize that. The most volatile news in US, not the time to enter the position ever into the news. So if you understand where key support, key resistance is before FOMC, you are in excellent shape. FOMC leaves targets rate unchanged. This is the market formations in front of you right now. Are you shocked? Should not be. I warned you. This is key support, this is key resistance. Do you want to touch this market? Do you want to use anything else? Is anything else ever give you this much accuracy? This is a problem, this is a range. Exact same place where Apple doubled in value when Apple was at 91. This is S&P in front of you on 5-minute chart. This is exact same dance on euro, on pound, on anything you choose to trade. This is a problem. This is a range. We knew it days in advance. Only Fibonacci can give you this much accuracy dance in advance. Nothing else ever will. Doesn't matter if you invest long term. Doesn't matter if you trade 1-minute chart. Did we know that this is key support? Absolutely not the place to short. So, key support respected, stunning bullish rally picking up the steam. The short we addressed prior, shock or not, rallied from reversal zone. Everything had been recorded. Know your levels. Play by the rules. The skies are the limit. Knowledgeable trader who understands and witnessing how crucial this Fibonacci support is, how everything identified in advance to the tick understands that at any moment price right now can collapse back down to support, because this is crucial Fibonacci reversal zone. Do you remember that? Where market sold off from before. So, if you know where key support is, if you know where ultimate trend inception is, you never short near. If you understand the power and volatility of FOMC, you know extremely well. This is a reversal zone, traders. Right now, price can collapse down to support absolutely, completely. Crucial moment on S&P, 3 minutes after FOMC. Right now, we're gonna find out if this is a massive bullish fake out or we're gonna see spectacular rally. Everyone with me? Any questions about this trade, please do ask. All recorded on video. All in advance. Never after the fact. So, in case you missed our prior discussions, let me walk you down memory lane again, shall we? On exact same examples. On S&P, on gold, on oil, on any market you choose to trade. As a matter of fact, I have not looked on Tesla in a couple of days. We should revisit Tesla. As you witness the power of bullish rally until Fibonacci reversal zone in front of you, if I convert this chart to 1 minute, exact same accuracy will remain. There are no surprises here. If I convert this chart to 3 minute, exact same accuracy remain. There is no surprises here. And if I would take a look on Apple, exact same accuracy remain. Rally despite the worst earnings in 13 years. Apple doubles in value from key Fibonacci support. What do you see in front of you? Do you see Fibonacci reversal zone? Of course. Does Apple reach this level? Does it start staging sell-off? Absolutely. Shock or not, just like S&P is doing now. There is no bad news on Apple until Apple reaches 200. My goodness. Did Apple crash? Of course. What do you see on the bottom? 140. Did Apple rally from this level? Absolutely. This is the reason. Method traded on Wall Street. No surprises here. All in advance. Never after the fact. Shock or not, Apple rallied again and again until Fibonacci reversal zone. It is that simple. And that's exact same things on S&P. That's S&P right now, just like Apple. Just like any instrument you choose to trade. And if I was down memory lane on Euro, my goodness, let's walk down memory lane on Euro. Why not? Of course. It's all the same. Here's Euro 2014, exact same Fibonacci reversal zone, and you saw on 1 minute chart, correct? Shock or not? What is the difference? This is Euro. Long-term chart. Identical Fibonacci levels. Identical reversal as you saw on S&P. Not the place to buy, the place to short Euro from. And this is exact same support on Euro 2 years later. Identical dance as on S&P. Charts are twins. This is a level that lifeline on Euro now. If Euro breaking through this level, 87 next. All present in the room for years. But this is the level Euro respected for the last 2 years. Just like on Apple. Just like on S&P. It's all the same. This is Euro this year. What do you see in front of you? 111. What does Euro do next? 113 this year, brick wall on Euro weekly. Slowly but surely, 111. Shock or not. All in advance. Where is Euro right now? Let's take a look. So here we go, traders. Here's pound. Exact same Fibonacci support on pound. 3600 respected on pound for 7 years. This is monthly chart on pound. What do you see in front of you? 111 Fibonacci reversal zone. There is no good news in Europe, none whatsoever. Brexit, what happens next is no surprise. Pound in free fall, crashing through key Fibonacci support. What happens when pound reaches reversal zone? Why in the world is it rallying? Shock or not? It's Fibonacci reversal zone, not the place to short. Nothing good happening in Britain. The biggest rally on pound for a very good reason only. It reached Fibonacci reversal zone. That's the reason it rallied. It is that simple. Every time, every day, every trade. Market is flawless Fibonacci puzzle. Play by the rules. The skies are the limit. Nothing else matters. Horrific news in Britain. The biggest rally on pound in 8 years. For one reason only. Price reached Fibonacci reversal zone. And that's the reason it rallied. It is all the same. Just like S&P in front of you right now. This is a trade. This is a reversal zone. just like on pound, just like on euro, just like on Apple. Not the place to enter into, the place to exit, the place to monitor for reversal. And if S&P not reversing, if S&P stuck in worthless chop, walk away. Do not touch the market. Only if rules are met, you can take a trade. It is that simple. Pure price for entry and Fibonacci for exits. Nothing else matters. So if you would like to join us, please review the information on the website about various courses that are offered. Group course 12 weeks, private mentoring 6 months includes all group sessions. The most powerful testimonies on the website are success stories from our students with podcasts, videos, and multiple recordings where you can see and hear and view what students are accomplishing. No matter what level of trader you are, no matter if you're beginner, no matter if you're hedge fund manager, these are the traders in the course now. Pure price for entry, Fibonacci for exits. That's all that matters. Students winning Forex contest, students trading options, students who've been trying for 20 years, finally succeeding. And that's the power and that's the accuracy of pure price for entry and Fibonacci for exits. Nothing else matters. If you would like to learn more about the method, please review the webinar on the website that will answer a lot of your questions. Classes recorded, over 75 classes in member area. Modules 9. I am with students 4 days a week. We are having a ball, all in live markets. If you have any questions after reviewing the information on the website, if you would like to see videos on our YouTube channel, please do not hesitate to contact me. Simply click on Contact Us page, send an email or call. I always look forward to speaking with you.